Your business may be thriving, and that's okay. In fact, congratulations. But one tax assessment notice coming from KRA or an agency notice can wipe out all your profits, reputation, and even the peace of your mind. Ignoring or wrongly responding to a KRA tax assessment notice can trigger penalties, fines, and even legal enforcement by KRA on your business. Always know, the way you respond to a tax assessment notice the very few days after you receive it will determine whether you keep your business or you lose it. A KRA tax assessment notice basically is a way of KRA telling you that their systems have identified and they have flagged inconsistencies and missing information in your tax returns. And all they want you to do is to provide them with documentations and explanations so that they can have a better understanding about what your business is doing. They can make a choice and a decision whether to penalize you or not in the event that what they thought is not actually true. There are two types of notices that you can receive from KRA. One is additional tax assessment notice, and number two is agency notice. Agency notice is when KRA sends a letter to financial institutions asking them to deduct money from your account and remit the same to KRA. Now, the question is, what can trigger KRA to issue you with these notices? Number one is when they are convinced that you are understating your income with the intention of not paying taxes. Number two, when they know that you could have overstated your expenses. Remember, taxes are payable on profits, and the way we arrive at profit is we deduct expenses from revenue. And therefore, if you want profit to be low, then you underestimate your income and you overestimate your expenses, and by doing so, the profits will be low and you will end up paying less taxes, which when KRA finds out, they will issue you with an additional tax assessment notice. Number three is when KRA understands that you have claimed inaccurate or incorrect credits when you are filing for your tax returns. And of course, number four, every other time KRA notices that your tax filings and tax returns have inaccurate and incomplete record, they will always give you an additional tax assessment notice so that you can provide them with the relevant documents and explanations for them to make a determination whether to punish you or even to congratulate you for filing taxes the right way. If that is very clear, now what could cause even KRA to think that you are not compliant from the word go? Number one is variances, inconsistencies between your purchases and sales and VAT returns. If they are not agreeing, then that is a gap that KRA will exploit and they will issue you with an additional tax assessment notice. When they notice that you are not filing taxes or you are filing late or sometimes inaccurate taxes, so missing or late or even inaccurate tax filings, that will trigger KRA to issue with an additional tax assessment notice. And number three is from the information that KRA collects from third-party individuals and organizations. It could be information KRA has collected from your suppliers or from your customers, your banks, or even the government systems for those people who trade with the government, including if you have many houses, you generate rental income tax, but you don't pay. You know, and you think that you are very wise, KRA will not catch up with you. But on the other hand, you have registered numerous KPLC accounts because you have many houses. KPLC is still an entity owned by the government of Kenya, and they communicate with each other. So you can hide, but you cannot run. KRA will get that information from KPLC and they will come for you by issuing you with an additional tax assessment notice. Now, hold it there. Now we have come to what you should do in case you are issued with an additional tax assessment notice. When it comes your way, relax. Read it carefully and properly with the aim of understanding what type of assessment notice, what type of an agent's notice has KRA provided you with. Once you know whether it is an additional tax assessment notice or it is an agent's notice, now you know how to react. Number 2, you need to understand the tax period which KRA is concerned with. Is it the VAT return for last month, for the month before, or is it income taxes for the last 5 years? Understanding the tax period which KRA is concerned with is very, very important. And also, you need to know how much time do you have before you respond to them. The timelines, the deadlines, they are very key, because if you over-delay, you will lose the opportunity to defend yourself, and KRA, they will proceed to take a legal action against you. Once you have understood that, what now you need to do is to gather all supporting evidence and documents. The bank statements from all your bank accounts, you need to bring them in order. Receipts that you have received for every purchase that you have ever done. The invoices that you have received from your suppliers, or the receipts that you give to your customers, always keep them properly. The schedules for depreciation, for wear and tear, all your business records, you need to put them in place, because it is a case you have against KRA, and you need to defend yourself if you are to stand a chance of not being penalized with heavy penalties. Now, if you are not very sure about yourself and maybe the case is complex, that you have not been paying taxes, or KRA is claiming so much from you, you need to engage a tax consultant, a tax expert who understands the accounting rules and KRA expectations. They will guide you and help you avoid costly mistakes. Also, you need to organize all your correspondence with the KRA so that you can continue to support yourself and to avoid escalating the matter. So in summary, when you receive a KRA tax assessment notice, don't panic. Instead, read it carefully and slowly so that you can understand what type of assessment notice, So in short, when you receive a KRA tax assessment notice, don't panic. Just read it carefully and slowly so that you can understand what type of assessment notice has KRA issued you with, what are the timelines, and what tax period is KRA concerned with. You need to act quickly, because delaying will cause KRA to impose more penalties on you. Engage a tax professional to guide you on how to respond to such matters in case the notice is complex and you are not sure how to go about it. Of course, you need to gather all the relevant documents and records for you to be able to defend yourself. Always know the worst mistake that you can make is to ignore or to delay to responding or delay in responding to KRA tax assessment notice. Always know, doing the right thing will help you to protect your business, to protect your investments, your profits, and more importantly, the peace of your mind.